What's going on, my fellow stock market freaks? It's your boy Kevin. Welcome back to the channel. In today's video, we're going to be talking about something wild. The stock market did something yesterday that it has never done before in the history of the stock market. It was crazy. It was a sight to see. Never seen anything like it. In today's video, we're going to be breaking it down, talking about what happened, what the hell it means, and how we can make some money from it. Let's get it. The Dow Jones Industrial Average opened up in the red yesterday and had a giant, massive sell-off. At the lows, it was down over 1,000 points. Something crazy happened. We hit a bottom, and the Dow Jones rocketed back. The entire market rocketed back and closed in the green. We're selling off today, but that has never happened before. The Dow Jones has never been in the red by more than 1,000 points and came back to close in the green. So we're going to be talking about what that means, what the hell happened, and how we can profit from it. So I have the Dow Jones chart pulled up on the screen. Look at this sell-off yesterday. This is a 5-minute chart, and it just shows this massive dump, right? You had this massive, massive dump right here. Boom. It doesn't look that big. That is a massive move. And we ended back up closing in the green. But as you look now, we're back testing those levels. So we're going to talk about what the sell-off means. Is the sell-off over? Was that closing in the green yesterday a big deal? Or is this just the beginning of a larger correction? The S&P 500 in all actuality had a much crazier move. If you look at it, the sell-off, boom, and then it got it all back. We've never seen this. Volatility is at crazy highs, and you know we need volatility in order to make money. So if you're an active trader, active investor, don't listen to all the BS on YouTube, TikTok, Twitter talking about crash, crash, crash. Sure, maybe the market's selling off, but there is still money to be made. All right, so what are investors looking for? Why did we see this massive sell-off, and why have we seen this massive sell-off over the last couple of weeks? Over the last couple of weeks, it's been ugly. It has been ugly, and the market is down considerably off of those all-time highs. Investors are concerned that the Fed is giving them the double fist. The double fist, right? They're tightening down. Right here, you're tightening down on interest rates, right? You're tightening down, you're raising rates, and on the left fist, you are tightening up the spending, the buying of assets. The Federal Reserve has been doing two things: keeping interest rates artificially low, so these big giant banks, they are borrowing as much money as they can possibly get. They want to take on as much debt right now as possible. If you're a company out there right now and you need some cash, right now is the best time ever to borrow money because interest rates are so low. As soon as those interest rates go up, these people are not going to want to borrow as much money. The economy is going to slow down, and the stock market is concerned about that. And that is one of the reasons that investors have started to sell this market off. Number two, the Fed has been buying assets, bonds, treasury bonds out the yin-yang. They've been spending tons of money on these assets. When the Fed is just throwing money into assets, it's going to prop up markets, real estate market, stock market, the whole 9 yards, and they're starting to taper down that asset buying, which also has investors a little bit concerned, giving them the double fist. And nobody likes the double fist. We need to pay attention to what the Fed is doing. If you have any money, if you have $1 invested in the stock market, you need to watch the Fed meeting this week and look at what they say about the interest rate hikes. Is there going to be an interest rate hike in March? I think there will be. I think they're going to say there's going to be 4 interest rate hikes in 2022. Initially, we expected just 3 interest rate hikes. That has investors a little bit concerned that they're going to be trying to speed up the process a little bit too fast. Sure, inflation needs to be put in check, but when you speed up that process too fast, it tightens up the economy, it tightens up the market. Not as much money out there to throw into the stock market. Obviously, that could result in a correction. So pay attention to the Fed meeting this week. Is there going to be a raise in March? If there's no raise in March, the market will probably react favorably. However, a rate hike in March is already priced into the market. Therefore, we may have a trade on our hands, and we'll talk about that later on in the video, so stay tuned. Don't click off the video. If you click off the video, you're gonna miss a potential monster trade. Jerome Powell has a big decision to make, right? You have people crying inflation, 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 and you all have a stock market that is skating on thin ice. If the Fed decides to react fast, they decide to raise interest rates kind of in a hasty way to get this inflation under control, the market's going to crash. There's no doubt about it. But in my opinion, I see no way that Jerome Powell raises rates just 5-6 times this year. If he does that, it's going to need to hit 5 or 6 in order for us to see a market crash. If he keeps it at 3 or 4, I think the market stabilizes, the fear evaporates, and we possibly retest all-time highs. But if he goes, yeah, we need to get this inflation under control, we're going to be raising rates 5 times, 6 times in 22, then obviously we're going to see a correction. But I do not believe that happens. Also, there is definitely room for a market correction. If we look at the S&P 500 chart, I got the SPY pulled up on the screen. The daily chart looks rough. There's no doubt about it. It looks rough. A big sell-off here from 480 all the way down to the 420s, the low 420s yesterday. But if you back off and look at a weekly or a monthly chart, we still have a lot of room to drop, right? Look at the next real support area is down here on the weekly chart at 330 area, 327 or so. Right now we're at 427. So you're talking about 100 points back to the 2020 levels, the pre-Rona levels. You have 100-point drop on the SPYs. That is more than a 30% correction from where we're trading today. Does that happen? I don't think so. Not quickly, at least. And there's going to be really good deals in the market. I don't think we get down to 330. I'm not saying that. I'm just saying that is the next real clear area of support on the weekly chart. Sure, you have some small, minor areas of support, but the next big, real, legitimate level on the weekly chart is down near 330. That said, I do believe there's a long trade, not necessarily an investment, a long trade when the Fed meets this week. We are expecting, it's already priced in, the double fist tightening that we just talked about. So it's already priced in. So what if the Fed comes out and says there's not going to be a rate hike in March? We want to get this inflation under control, but we're going to do it really slow. There's going to be a gradual tapering. We're not going to expedite this. The market would jump for joy. The market would jizz itself. I'm telling you, the market would be ecstatic and there would be a pop. Now, I think the percentage chance of that happening is about 25%. I do think there will be a rate hike in March. Okay, so we have a 25% chance that there's no rate hike in March. That leaves us with a trade, okay? Even though the percentage chance of there not being a rate hike in March is very low, there is a good chance that they raise rates. But that's already priced into the market. So we can go to the options chain, buy some call options, and if the market pops, make a ton of money. And if it doesn't, I don't necessarily think there is going to be an adverse reaction to this Fed meeting. So our downside is capped. There's already been a pretty good sell-off over the last couple of weeks. And if the market doesn't raise rates, the market is going to be near highs in the next couple of weeks, in my opinion. So we have a 3 or 4 week time frame for this trade, and I'm going to be going into the options chain to buy some call options prior to the Fed announcement. The February 22 call options, got the puts here. Let's go to the calls. We can look at the money, maybe a little bit out of the money. I don't like to go too far out of the money. These 430s are trading for $12.79 a contract, $12.89 a contract. A little bit of a spread there, but I like those 430 call options expiring February 22nd. Here's what I think happens, all right? So we're trading down here near these lows, right? If the Fed raises rates, I think we just have a little bit of volatility post-announcement, but we're still trading in the range that we're currently trading at. So we're not going to make money. We're not going to lose a ton of money if the Fed doesn't raise rates. or if the Fed does raise rates. If the Fed does not raise rates, this is what I think happens. The next couple of days, we get one of these, and we're back in the 450s, and it's a monster trade. So this is just my opinion. I'm not a financial advisor because, remember, I'm way too stupid to be a financial advisor. So do your own research. I like this trade. There is risk when you're using options. I love you guys. Catch you in the next video. Until next time.